Hello everyone, welcome to the Road to the Millionaire Retirement. My name is Andrew and thank you for checking out this channel and watching this video. So in this video, I want to talk about something awesome about dividend and why you should do this method. And the method that I want to talk about is called Dividend Reinvestment Plan, also known as DRIP. Now this is pretty awesome and I'm going to show you the calculation behind that, mathematics behind it, so that way you understand and you can see why this is a very critical plan that you want to enforce on your dividend stock. The person that I want to use as an example is Bill Gates, because Bill Gates is well known in the industry and the world, and he's also very wealthy. And I want to show you guys how the rich people get richer in a sense of investing in the stock market. So based on the New York Times, they published this article in March 13, 2020. And based on this article, they claim that the Mr. Gates owns about 100 million shares of Microsoft. So we're gonna play with this number because New York Times is pretty reliable source based on their reputation. So I'm gonna assume that this is true and we'll go with this. This is about more than 1 year later, but for the sake of example, we're gonna stay with 100 million share at the moment. So right now, Mr. Bill Gates has 100 million share, and the current price of the Microsoft right now is 242 and 35 cents, which come out to be about 24,235,000,000 worth of asset that Mr. Bill Gates has in Microsoft. And right now, the current dividend pay for the Microsoft is about 56 cents per share. So what we're gonna do is we're gonna times 100 million share times the 56 cents per share, and that comes out to be $56 million. Now, so the next question is, so how many shares can we purchase with $56 million? Well, for the sake of simplicity, we're gonna assume that the price at the time of the purchase for the Microsoft is gonna be the same, $242.35. So we're gonna do 56 million divided by $242.35, and that comes out to be 231,070 shares. Now, what this means is that this amount of share is going to be added to the total of what Mr. Bill Gates currently owns. So it's going to be 100 million share plus 231,070 share, which equals to 100 million and 201,070 share. What we're going to do is take this number and we're going to times that by 56 cents per share. And on his next quarter dividend, it's gonna come out to be 56,129,399. So it's about 130,000 more compared to the last quarter dividend pay. And we're gonna do the same thing. How many shares can we buy with this? Well, if the Microsoft cost stay the same, that comes out to be 231,604. So it's about 530 share more than the previous quarter, but this share will be added to what he previously owned, which is 100,231,070 shares. So if we add this number with this new shares that he just earned, he's gonna have total of 100,462,674 shares. Now let's say the dividend price went up, because dividend usually always go up, and you could check this out by just looking at their dividend record. So here on Microsoft, I'm gonna go click on the more, and we're gonna click on the dividend detail, view more. So at least for the past 10 years, Microsoft has been paying same dividend for every 4 quarters, and after that they've been increasing their dividends. So Microsoft has a good record of increasing their dividend pay. And we're gonna look at the last couple year of dividend. So right now they're paying 56 cents, and the last previous price was 51, so they jumped by 5 cents. And before that it was 46 cents, so they also jumped by 5 cents. And before that was 42 cents, which is jump of 4 cents. So let's assume that we're gonna go from 56 cents to 61 share. So if we were to calculate 61 cents per share times the new amount of total shares that Bill Gates has, that comes out to be 61,282,000, which is about 5 million more than the previous quarter. And you would do the same, you would calculate the amount that you can buy for share by taking this number and divide it by the amount of the stock price. Now, here's the different factor that you need to consider. The number one is that the stock price usually goes up and down. So whenever you get paid the dividend, if the stock price is higher, then obviously with the amount that you're getting paid, you're gonna be buying less share, which kind of sucks. But at least your stock price is going up, so you're getting all that capital gain. So it's a win. But on the other side, if the stock market was going down and is doing poorly, you'll be able to buy more share because it's cheaper price, which is win for you. So the way I look at it, it's a win-win situation because if the stock price goes up, you're getting the capital gain. So you're making money. Even though you're able to buy less share, it's a win because you're making more money. If the stock price is going down, you're gonna be able to buy more share. So when the stock market bounces up, you're gonna gain a more capital gain. So that's how I look at it. And if you guys are investing for the long term, every time you guys see a stock price going down, especially during when the dividend pay is coming, you should be excited and you should hold on to your share because you're gonna be getting more. So this is the example of dividend reinvestment plan, or the DRIP. And why, if you guys have a company or a stock that pays dividend, you guys want to make sure that you guys are turning on the option to able to repurchase the stock where you got your dividend from. So as you can see, Bill Gates does not have to buy any share because with this strategy, Bill Gates is getting free shares by using the dividends that he's getting from his stock and just allowing his asset to grow bigger by the capital gain, having more shares from the dividend pay, and as the stock price is going up. So this is how some wealthy people are getting richer, because they are just allowing their money to make more money while he necessarily doesn't have to put any time into making money. Now, if you guys have seen my video, I do not personally do this just because my strategy is a little bit different. So my strategy is for every dividend that I collect from the companies or the stocks that pays dividend, I like to use those money into a new dividend paying company to allow to grow my portfolio bigger, because I don't like to rely on only like 5 to 10. I want to make sure I'm able to grab my hand onto more dividend paying company that pays good dividends but also reliable and safer. So the choice is yours depending on how and what you plan for your investment strategy is. So that's gonna be it for this video. I hope you guys found this video really useful, because I don't think a lot of people know about the dividend reinvestment plan, and hopefully this really helped you guys to consider about doing it. If so, thank you so much for watching. If you guys enjoyed what you saw, hit that thumbs like button. If you guys didn't like what you saw, then press that dislike button. Tell me what I should be doing more or what I can do to improve. If you guys would like to come along of my journey to hitting that $1 million retirement, hit the subscribe button so that way you guys won't miss out on future video. Thanks again everybody, and good luck on the stock market.